Hi, you guys. Welcome back to the show. Something we all hate but have to deal with in the new year is taxes. And if you're investing, you're going to have to know about a couple of forms that are going to be coming your way or that you're going to have to download off your brokerage website. So I'm going to talk about 4 forms today. 3 of them are really important, and the 4th one may or may not pertain to you. But if you have a taxable brokerage account, you will need to do these forms. So the first one we're going to talk about is the 1099 INT. This is for interest income, you guys. Now, we think taxable account, we automatically think brokerage account, but even if you have an online savings account, you guys, this is an account that creates interest. Even your banking savings account may create interest and have to send you one of these. Anytime you create over $10 of interest, the financial institution is responsible for sending you a 1099-INT. And it's going to have your name, it's going to have the payer's RTN number, and it's going to show the interest income paid to you during that day. Now, a couple different things. This may be, as I said, from a online savings account, a money market account. It could be if you cashed in a U.S. savings bond or you had any treasury bonds. If you bought any treasuries during the year, all this is going to show up as interest income on the 1099 INT. Now remember, interest income is always taxed as ordinary income, you guys. All right, so what if we have a brokerage account? Now, one thing to remember on these, you guys, is if you have multiple accounts, you may have to download multiple versions of these. For example, if I have my Ally account, but I also have a savings account at my bank, I would have to download or wait for them to send me the 1099 INT for each of those. So the 1099B is for brokerage accounts, you guys. These are taxable investment brokerage accounts. And basically what this is going to show is anytime you buy or sell a security. So you buy a stock and you decide you want to sell it. Depending on how long you've held it, you're either going to be a short-term gain or loss or a long-term gain or loss. Remember, if you sell a stock before a year, it's considered a short-term capital gain and it's taxed as ordinary income. Now, if you hold that for a year and a day, it becomes a long-term capital gain and it's taxed at a lower rate of, in some cases, 0, but usually 15 or 20% respectively. So cheaper than what you would pay for ordinary income. It's also going to show any losses. So if you sold a stock for a loss, it will calculate the losses. Also, it will show if you had a wash sale. What a wash sale is if you buy a stock, for example, and you decide to sell it, and then you rebuy that same stock within 30 days or less, before or after the date, it becomes a wash sale and it changes your basis and you lose the ability to take the credit for that loss. So these could be gains from collectibles, from any kind of security that is considered an investment. So this is one that's very important that you guys get. Again, if you have, like I do, if you have multiple taxable accounts, in my case, I have one at Vanguard, I have one at Ally Invest, and I also have my M1 Finance account. So I have to get 3 separate versions of this, each to show what I've bought and sold for the year. Okay, the third one we're going to talk about, you guys, is a 1099 dividend form. Now, you know, if you hold individual stocks, you're probably like me and you like the dividends. So there's 2 different kinds of dividends we need to be concerned with. We have ordinary dividends, which are taxed at ordinary income levels, and we have qualified dividends. Now, a lot of the companies that we invest in, American companies, have qualified dividends. As long as you've held the stock for a long enough period of time, the dividend becomes qualified. Now, there are some other kinds of dividend distributions out there. For example, if you have a REIT, even though it pays you a monthly or quarterly dividend, it's technically paid as a non-dividend distribution, which again is taxed at ordinary income levels. If you had any foreign investments that had taxes paid, that's going to show up on your 1099 DIV form. Now, thing to remember, again, It breaks it down section by section, you guys. If you had certain distributions or dividends paid for other types of investments, and I want to preface this by saying, A, I'm not a tax person. I'm not a CPA. Please, if you have a question about how to do this, talk to a tax professional, get the right answer. But these are forms that I've dealt with in the past, and I know for the most part, as long as you don't have any really strange types of investments, it's pretty self-explanatory. All right, so the third one we're going to talk about, and this form only applies, you guys, if you did a Roth conversion. Now, my wife and I started doing Roth conversions from her rollover IRA 2 years ago in preparation for retirement. So because we did the rollover, it shows as a distribution from the IRA. Now, this comes out with that, and it's, remember, all these forms are first sent to the IRS, and then they send a copy to you, or you download a copy. So what this will show was we converted 10,000, so 10,000 for a gross distribution, taxable amount, or they may mark taxable amount not determined. If you elected not to have taxes taken out by your provider, like we didn't, we're going to be responsible for the taxes on that amount. Okay, and then it will mark the rest of the boxes appropriately. And it will let the government know that, hey, I converted $10,000 to a Roth. I have to pay taxes on that distribution because I took it out. Now, one thing you want to be very careful about with this, you guys, if you did do a roll or a conversion to a Roth, is that you got that money out of one account and into the Roth in less than 60 days. Otherwise, you'd be responsible for also paying a penalty for not doing that. So these are important forms to know. It also goes into, there's different codes. For example, if I took a distribution and I was over age in the distribution codes, if I was over 59.5, it would show a 7. That means that it was a legitimate distribution above the 59.5 rule. If I wasn't and I was younger, it would show with a different code number, probably a 2, which would show that I was responsible for the 10% penalty for withdrawing early. So for the Roth conversion, all you need to be concerned with is the amount that you converted and knowing that they're going to give you this form because you have to pay taxes on it. Well, you guys, that was just a really quick rundown on some of the forms, being that we're coming up on tax time. Now, as I said, in most cases, these will be sent to you from your brokerage house, from your bank, from the companies that are responsible. What I've found is most times I get an email from my brokerage that says, hey, the tax forms are available. It's faster for me to download them and have them. That way I don't have to wait for the mail. Check with your brokerage and find out what their rules are. If you have, for example, Vanguard, where you do all online, they do not send a copy. So I always have to go and download them. But these are forms, because we're coming up on tax time, are very important to make sure that you get them all entered into your tax software or into your person if you have a person that does your taxes for you. All right, you guys, I hope you got something out of this. If you did, do me a favor. Drop me that like. It really helps the algorithm. If you're not already subscribed, you know the deal. Hit the red button, ring the bell. You'll get notified every time I make a video. All right, thanks a lot.